Hey everybody, Courtney Smith here with our May 3rd edition of Wall Street Winners. Let's get going here. This is the May 3rd edition of our disclaimer. All right, so S&P makes new all-time highs. That is fantastic. Of course, it's helping our portfolio equity very nicely. But as you can see, we're starting to see the purple predictor start to not look very good. We're seeing a divergence between the smart money and the market. And usually the smart money wins these battles, so that makes me a bit nervous. Over here, the Dow, we're seeing a decline in buying pressure and selling pressure. So that's also in kind of a trading range right now, not doing much of anything. The NASDAQ is holding up well. It made a new all-time high on Thursday, and right now, got to be looking pretty good. However, look for some weakness in all of these indexes early in the week. We've got momentum divergences. We've got the smart money selling. So we're going to see some declines in the market here early this week. Like I've been saying now for quite some time, this is going to be a sluggish bull market. No melt up, no melt down, just grinding higher. Seasonality, we're still on a buy signal for the stock market up at the top, and we're also on a buy signal on the utilities. So here we are, we're in May. The utilities now, you got to be long utes, you got to be long stocks. Seasonality, choppy, but generally higher. We're really focusing mainly on the purple line and secondarily the red line. The purple line would be the first year that a Democrat is president, and the red line is post-election year after the incumbent party loses, okay? They're roughly the same, although the purple line, which is the first year of the Democratic president, is a bit more bullish. And then we always want to look at the green line, which is all post-election years. Generally speaking, pretty bullish year, but look at that period from August down to the end of September. I'm really quite worried about that, and I think we're going to see probably a 10% correction by the time we get over there. We'll keep you posted, of course. Asset allocation, new all-time high. Why? Because people are selling bonds and buying stocks. They're getting no yield at all in the bonds, and so they're saying, hey, let's go buy me some stocks. Stock market riskdicator, all-time high. When the people like risk, well, in these days, they don't have any choice. They have to take risk. The Fed's easy money policy is forcing people into risky assets and out of less risky assets. That's what our asset allocation slide is showing, and that's what this slide is showing. Risk is increasing in society, and maybe that late summer, early fall period is when we're going to have to smack around some of those people that are taking too much risk. Global shares, not quite as good as the U.S., so we'll stay focused in the U.S. Yield curve started to move back up. Now, I told you this was going to happen last week, and so the dip in the yield curve is over. Look for it to go up and make new highs on this move. This is pretty bullish for the stock market, though. We like it. It's bullish for the economy as well. This is one of our leading indicators of both stocks and the economy, and being as how it's going up to make new highs in the coming week, I think this is quite good for the market. Bonds, you can see the purple predictor is below the price action, which shows that the smart money is still selling. Now, last week I told you we were going to start to see it sell off, and we did sell off. We're going to see it sell off more this week. Bond key factors, all of them are saying we're going to see higher yields. All of them. Up at the top right-hand corner, CRB index explodes to new highs. Underneath that, gold not exploding to new highs, but in a bull trend, also telling us interest rates are going higher. And down at the bottom, the blue line, that's German 10-year yields. It's sharply moving higher as well. We're going to see bond yields in the U.S. go higher too. You can count on it. The dollar started to move sharply up, I think largely on the fact that bond yields are starting to go back up again, making the dollar more attractive. And also, we saw some incredibly positive economic news in the United States. And at the same time, Europe dipped back into a recession, a double-dip recession. Doesn't happen very often, but Europe was announced on Friday that they've done exactly that. So the contrast between the very strong U.S. economy and the very weak European economy gave a big boost to the dollar. Now, usually if the dollar goes up, gold goes down, and gold, in fact, has been drifting lower. I'm getting more bullish on it, but not ready to buy yet. Not ready to buy. Best thing is to just stand aside. Gold key indicators, last week, all three were bullish. This week, a dog's breakfast. One bullish, one bearish, one neutral. So the best strategy when your indicators are neutral is to not do anything at all. Why take risk if you don't get paid to do it? Crude oil, as I've been mentioning, I'm now bullish on crude oil, and I believe we're going to go make a new high. Look for this market to break to new highs in a sluggish manner, not a sharp, big bull market, but a sluggish bull market. In other words, what we've seen over the month of April is roughly what we're going to see going forward. About a 30-degree angle bull market, not a 45-degree angle, the way we did from November into March. That was a much better bull market than what we're going to see now. Now we're on a second leg up. It's going to be weaker going forward. Demand is increasing around the world, except in Europe. Supply is steady, so that means sluggish bull market. I think the demand for gasoline in particular is going to go up here. We're coming into summer driving season, and as the economy opens up, people are going to start to go on vacations and drive their cars all over the place. The only negative, gas prices up $1 over where they were a year ago. So that's going to dampen down some of that enthusiasm for summer driving season. Bitcoin broke to new lows and then rallied up. Really, it's a neutral market. We're at the same price we were a couple of months ago. I think the best thing to do in Bitcoin is to do absolutely nothing. But I will, of course, keep you posted if I see some type of movement that we can go back to the long side where we made a lot of money for you, or get to the short side and we'll go make a lot of money for you on the short side. Doesn't matter to us. We swing both ways when it comes to buying and selling. Okay. Thanks, freebies. Fully paid up members, hang on just a minute.